Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 11th of November, 2016, and we had a wild week, but it finished quite positive here for equities. Let's take a look at the numbers first. The S&P gained 3.7% this week, the Nasdaq 2%, Russell 2000 soared 10%, and Biotechs were up 14%, as were banks. So heck of a week, and I don't think there's anyone out there that predicted this, and if you did predict it, that's fine. I hope you made money off of it, but a consistent, disciplined approach is the way we look at it here at Alpha Trends. And on Monday, we had noted that as it was starting to gap higher above that 5-day moving average, that it's often what precedes a new rally. And obviously, we had a strong week here. We're above the rising 5-day moving average with a pattern of higher highs and higher lows. One level that's going to be important to keep an eye on, I think, is the volume weighted average price since Wednesday. So as I've been calling it, since Trump, that's the S&P 500. The average participant on the long side is making money, despite that massive sell-off that occurred in the overnight on Wednesday, Tuesday night into Wednesday. There was a huge sell-off that just didn't matter Wednesday morning. So where we are overall, we're back above that 50-day moving average, which is a really good thing to see because we've seen that it has been a level of resistance for this market over the last couple months. So next week, what we'll be looking for is for consolidations to occur either through time or price-wise. We probably don't want to see it get back down below 214.50-ish or so. If we do slightly, get slightly below that, then I don't think it's a horrible thing, but we'd prefer to see this market have a shallower pullback in here. That could set us up for further upside into the end of the year. The Nasdaq was, as we noted, a little bit weaker. It did still finish, though, as we said, up 2% for the week. But the one thing of a little bit of concern in there is that we're below the 5-day moving average. That will begin to decline on Monday if we stay below here as we get rid of this data. This is the volume weighted average price for the week, and let's just start this over here. The volume weighted average price for the week, you can see, let's go back to the S&P for a moment. For the week, the average participant made money as the average price was about 215. For the Nasdaq, however, the average price is above this market, about 116 and a quarter. We are also below the volume weighted average price since Trump, right there, coming together in that same area. So we have to be a little bit cautious here on the Nasdaq, especially since we have been closing below this 50-day moving average in here. So it's really a tale of two markets here with between the S&P and the Nasdaq, and we'll see even more so with the Russell in a moment. But heading into next week, we have to be a little bit cautious. We don't want to see it break below this week's low, and for it to get back to neutral, we need it back above 116.5. Then from there, we'll continue to update it on a daily basis for subscribers at Alpha Trends and see what the market gives us. We can't predict, but we would need to anticipate different scenarios so that we have a consistent objective approach to the market. The Russell 2000 also, gapped above that 5-day moving average, and this market was looking the worst, heading into this week. Last Friday, we were down below a declining 10, 20, 50-day moving average. We were, just coming to that 200-day moving average, and we've had a hell of a bounce right up to new highs for the year, and now we've got last year's highs within reachable distance up at just above 129. Now, this market has gotten quite extended here, obviously, rallying from 115 to 127. But the fact is, there is zero evidence that that the sellers are, looking at this with any seriousness at the time. The 5-day volume weighted average price is up at about 123 and a quarter or so. I think that this would be, something we want to see hold on a pullback. The volume weighted average price since Trump here is down at 124-ish basically. So this market has got very strong momentum to the upside. Today it was above the volume weighted average price all day, meaning it wasn't a good candidate for short sales, and we are still looking strong for the Russell. Now you can look at this market and say, where has it come from? And it's had this big move, which tells us it probably doesn't make make sense to chase this market? Where does it have the potential to go before it's likely to encounter a source of supply that will act as resistance? And we still have it's still possible that this run we could achieve that high. I think it's unlikely, but again, the market doesn't care what I think. The market doesn't care what any pollster thinks. The market trades based on the collective intelligence and prices in the supply and demand based on how everyone is looking at the market collectively. It's not about anyone's opinion. So we have to listen to the messages of the market objectively, and objectively, the path of least resistance is higher in the Russell 2000. Shorting it doesn't make any sense right now. Semiconductors had a little bit of a scare down towards that bottom end of the range that it's in, and we finished the week up near the top end of that range and back above that 50-day moving average. So the scenario for the semiconductors remains the same pretty much. That is that they are stuck in a range here within an overall uptrend. And again, it's more likely that that a sideways action gets resolved in the direction of the primary trend, and of course that primary trend is higher. Meanwhile, as it's in this range, you can either be a very short-term trader or you can just look at a different market for better opportunities. The biotechs, as we noted, had a huge week. This was a reaction that we're not going to see all these regulations that Hillary had pretty much said she would do on this group, but we're back above that 50-day moving average. We're back above the year-to-date volume-weighted average price, and now this is the level we're going to want to see hold as support down 278 to 280. If we can see it pull back into that area, I think that would be good for this group. In that, we're still above that rising 5-day moving average. So certainly selling short doesn't make sense here. I don't think it makes sense to buy with a market that's extended. I'd rather see that it either corrects sideways through time or we get that pullback down towards the 5-day moving average and the prior resistance. Shares of Apple still making a pattern of lower highs and lower lows. So there's no reason to be long Apple from a intermediate term standpoint. We are still above the volume weighted average price from the low it made earlier this year, and that's just below this market near the 104, 105 level. So again, there's no reason to be a buyer of a stock that's declining just because you like their products. This one is still, we're going to need to see Apple get back up above probably 111 just to become neutral. So I don't see it setting up here within the next few days. The really the group that really got hit the hardest this week, down 7.5, close to 7.5%, were the bonds. And I'm not sure, but I believe this was a record sell-off for the bond market. And even though the bond market was closed today, the TLT, which is a 20-year blended maturity ETF, continued to sell off. And on the weekly time frame, you can see we're below every level that was supposed to act as support, which is why when we have a declining 5-day moving average, we don't buy at perceived levels of support. Instead, we look at it and say the trend is lower. Let's wait for it to break back beyond that 5-day moving average and look for a pattern of higher highs and higher lows. If it had done something like this, it would be a completely different story, obviously. But instead, the bond market sold off and it continues to sell off. So there's no way to know exactly where this market will bottom out. It's gone past every potential level of support based on Fibonacci, based on prior areas of consolidation. And playing guessing games is not what the market is all about. And if you want to play guessing games finding the bottom, it's cost everyone who's tried so far, obviously, for this entire year, as the bond market is I guess that's not true, but very close to negative for the year to date. In fact, let's take a look at that together. Year to date, we're up 1.2%. So just an incredible rally unfolded here, and we've got the potential of finding support in here. Wait for actual support to be found before you in market prices to turn back higher before you decide to purchase. I like to look at the KBE for the banks, and you can see that they had a fantastic week. We were long. We got long in Alpha Trends Wednesday morning, actually, right in here at forgot the price, 67.40ish or so. We've taken a third off, and we've still got 2/3 of our position in AXP. We were also long AK Steel prior to the breakout. In fact, since last week, right over here, we've been long AK Steel. And another one we're long is FDC, which looks like a great candidate for continuation still into next week. You can see here the volume weighted average price since the IPO that was last year, and we're above the rising 10, 20, and 50-day moving average. And we've also got a nice short position of 20 million shares. So this company, I believe they reported earnings this past week, and the volume weighted average price since that earnings event we're above a rising 5-day moving average. So there's one you might want to take a look at, and that'll do it for me.